If anybody has any questions during this short webinar, if you can please type in the questions. I may not get to them right away, but I will get to them before the webinar is over, I promise you. And for some reason I do not get to them, if you can please shoot us an email at info@trendfollowingtrades.com. That'd be great. If you want to talk on the phone, shoot me an email with your number. I'll give you a call. I am in Eastern Standard Time, so just please keep that in mind in case you're in Europe or other parts of the world. All right, let's get started. First of all, I'd like to thank you for taking the time out to attend this webinar. My name's John, and recently, at the end of last year, I came on board as a partner with my wife, Sylvia. We are both real money traders, and I am trading in the trade room moderator, and that's something I'd like to talk about further down the road. At the end of this webinar, we're going to offer a promotion for those that can subscribe by the end of the day this Friday, February 15th, midnight Eastern Standard Time. So the purpose of this webinar is to give everybody that's interested an update on the company, some of which I just explained, and some of the tools. The auto signals, now let me just minimize this website here and bring you up to what we trade in the trade room here, a couple of intraday day trading charts. But essentially, these little symbols you see here, these diamonds and these arrows, these are the auto signals. That once certain criteria are met, they fire and signal an alarm if you wanted to. The alarm can be customized. It can be a standard bell, whatever you want. This is all standard now. And what you're looking at here is a setup broadcasting in the trade room of two markets. And essentially what the trade room does is we take the signals that the system fires and we filter them out. And then we also use various different forms of support and resistance. Not Fibonacci or anything like that, but we use prior day's highs and lows. That's what you're looking at, the green and red lines here, as well as intraday areas of support and resistance that are created. And we do this to filter out trade entries. We also do it to filter and to manage in-trade money. So if we're approaching an area of support, we have a choice to either move our stop to break even or just take the profit there. The method is designed to be a trailing method, which I'd like to talk about the power of trailing. And although in the room we are just trading one contract, I don't catch every trade. I do spend a lot of time, working with the people, talking about the market, getting certain reads on the market, looking for things like divergence and reverse divergence and things that other traders besides us look at. And, we are inside-out traders, meaning we trade from the inside out, looking for the trend to form and continue. It is the way that big money follows the market. So from a standpoint of the amount of energy put into trading, it's very visually simplistic. And the risk to reward, we always manage a minimum of 2 to 1. So our risk being 1 and our reward being 2, essentially 2 bricks of risk and 4 bricks of target. In this case, we're looking at Wick-Granto charts. Also, I'd like to talk about some swing trading, Forex, ETF stocks, etc. And some of the things you can do with options on them. I'll bring in some charts in a little bit. And also, in the trade room, one of the things that we will bring up, by the way, the trade room is optional. It's a $70 a month add-on to the tools. And essentially the tools are $99 a month. We're trying to keep the price as low as we can for all kinds of traders. It's a standalone system. We're talking about NinjaTrader right now. And, you can use it as a system all by itself, which we're doing here, or you can use some of the tools and add it to what you're currently doing now and to assist you along. There is an initial setup fee the first month, but that's just to get you started and going. And once you're set up, we can do things, if you go away on vacation for a month or something like that, we can put you on hold and, deactivate and reactivate you when you get back, all at no cost. Once that setup fee's paid, it's a one-time thing. Same thing with the room. Again, the room is optional. It's an add-on to the tools and the website. And at any time you can choose to continue with the room or not. But let me talk about some of the things that go on in the room intraday trading as we trade. This was today in oil, okay, and kind of a choppy day this morning into the news release, the oil inventories. That is something that we identified quite a bit. I use this website right here. It's very popular, forexfactory.com. And in this website, it gives us a lot of news releases related to currencies, but also affects the indexes. And as you can see, tomorrow we have unemployment claims at 8:30, and we'll open up the room at 8:15 on days like this, so that we can, get all set and ready. And we don't like to trade into the news, but we like to catch any post-news reaction that may move things like commodities, like oil and gold, and different things like that, the CL and the GC, and any other commodities that you might trade. We try to stay out of index, at least I do, until the cash open in New York, just because that's when the volume really comes into it. So let me get back here. And, so we talk about news. So we get into the market this morning looking at crude and the Russell. We generally trade an index and a commodity in the room. And here you can see some signals. Let me go briefly and explain some of the indicators here. We have momentum. We call it MOMO. This is a price momentum indicator. It's a hybrid indicator. It includes a lot of different things like acceleration and actual price momentum. It's modified so that it doesn't diverge easily. So when you're in a run, you basically, and it's of structure where it looks like it's going to keep going. You don't get a divergence at every peak of the run that happens. So it's a very nice indicator. A lot of people like it. It shows divergence. And when it does show divergence, it's very important. It also shows reverse divergence or hidden divergence, as people would call, things we really don't want to trade into. And as an example today, through this chop here, we also have a chop zone, and it's defined in each market. You can set these settings to what you want, but in this area, when momentum's in this area, we really don't want to be trading because generally price is in a choppy area. We like to go for the best probability of getting a 2-to-1 risk to reward. Getting some nice profit out of a trade versus trying to scalp 3, 4, 5, 6, even 10 ticks, and having as much risk or more risk on the trade. So we try to stay away from that. It's in the long run, it can really generate a nice upside equity curve. And when you have days, small losing days, which everybody will have, and unless you're a really great trader, the days where the market tends to run and continue easily make up for those days. Also, we like to use a trailing method as an example. This circle right here, right after the oil news release, was a trade that was entered off this signal. And really, in-trade risk only had a couple of ticks, but it was a trade that was put in with a stop limit order. Everybody could see it. We don't, we're not a signal service, and, we do follow all the NFA and CFTC guidelines. A lot of disclaimers as you go in. We are an educational service, although we do trade real money in the room. At least I do, putting one contract on for now. And then room moderating is something new to me. I've been doing it for about a month and a half now, getting very used to it. So as the profit increases, we'll add size. But in this case here, you get short here. When the signal is going to fire. This is a wicked Renko bar. The close of the bar, you get short, you hit your profit target, and you trail. You trail your remaining position out. In this case, we trail these, close above these stop dots here. That's what these are. So we got in here, we got 20 tick targets off our first position, and then actually exited out of here with a 30 tick trailer. Keeps us out of all this junk. In this case, we did have other signals that you can use as add-ons or standalone signals by themselves that did go to profitability, did hit 2-to-1 targets. I personally, once I'm in a trade, like to use the trailing or mental trailing method and not add additional risk into the trade unless it's an area, a reject off of recent support and resistance. So that's kind of a little summary of what goes on there. We identified with this trade here, see I typed in here reverse divergence, no entry. We have reverse divergence here, so we don't want to trade into it. In this particular case, it made a double bottom, and this one a full 10 ticks. A lot of people think, wow, 10 ticks, that's a lot. If you want to, you can take profit here. In the case of the way I manage money in the room, I just basically take the risk out of the trade and move the stop to break even, hoping that this will break. This trade was filtered out completely because of the reverse divergence, but had it not, that's what I would have done. I would have had a break even. Other people not used to seeing so much profit in the trade may just come and, or used to taking 10 ticks in a certain market or less, may just take it. Almost every one of these signals offers anywhere from 5 to 10 ticks easily. If you're going to do a 1-to-1, but that's really not the way it was designed. When you do a 2-to-1 reward to risk type of ratio trading, you can have a much lower percentage of profitable trades and still come out very profitable at the end of the day, end of the week, end of the month. So that's the whole purpose. It's a little bit unique. We don't, everything's very transparent in the room. I discuss as real time as I can the markets we're looking at, as well as different markets, which I'll bring in and go over. We also have to the right of this is crude oil 5-wick Renko. I bring in one smaller time frame, the 4-wick Renko. And in this particular case here, that trade that was taken this morning, I'll just line it up here. You can see this trade here lines up with this trade here. We're looking for alignment between smaller time frames and larger time frames. And here, one time frame under, we had momentum go from buy to sell, get a nice retrace outside the chop area, and then we go short. You have it also on the larger time frame from buy to sell, nice transition, little retrace. Wick Renko bar closes the other way, and entry. Also, we trade Renko bars. In the room, we do the Wick Renko bars, but we provide Renko bars. That's standard with Ninja, but we do provide Wick Renko bars. And there's a lot of other type of Renko bars that people trade with out there, better Renko. I mean, I can probably name 10 or 20 of them, and I guess there's probably another 10 or 20 more. But these tools are self-adjusting to any type of time frame you want to put in, and I will talk about that right now. One of the things that I'm getting back into is swing trading. It's something that, especially of Forex and in retirement accounts, ETFs, and if you're going to look at ETFs and stocks, you can also look at options. But for now, I just want to bring in a chart here. This is a chart of the euro. It is not the euro-US dollar cross that you would trade with Forex. However, it is the euro-US dollar futures, which essentially are identical in their structure and format because they are ARB markets to stay together. And I just want to show you the signals here and the potential that's involved. If this was a currency pair, euro-US dollar, you see these arrows here. We call those flip trades, and we call these diamonds turn trades. And essentially what that means is it's the amount of pullback it gets into this value area. When momentum's green and price pulls back in between what we call a trigger line and the stop dots, and we get an arrow, it's a signal to go long. We just take a look to make sure we're not in a state of divergence or reverse divergence or things like that, and then we have permission to go long. Then we like to trade on a 3-lot type of method, whether it's micro, minis, or full lots. Talking about Forex now. And what we do is we look at our risk, we calculate that, and then we calculate our reward for our first target, trying to keep the 2-to-1 in mind. In a case like this, we get long here, our risk is down here, then we say, okay, 2-to-1, 1, 2, and so it'll be somewhere up in here. But we notice to the left here that we're right near, this could potentially be a double top coming up. So if this is just a few pips or ticks away, of course we're going to try to take profit right before the double top. And after that, we follow these stop dots. I would take my third position to break even, just so you don't lose anything on it. But as days and time goes on, we follow these stop dots, and we're out right here. You can see a color change of the bar here, and that means we need to exit here. So you get in here, just give an example, at 1.2315, let's say, and then we get out of here at 1.2955, let's say 1.3 for, around number's sake. You've got 1.23, you've got eventually 700 pips of a profit in here. So granted, there's a lot of days going on here, but it's very clear to the upside. So it's something I wanted to talk about for a while. It was the swing trading, same tools. We set the chop zones a lot different in the swing trading of, there's a 1440 minutes, so this is a daily bar, 24/7 type of trade. We really like to look at support and resistance, things like that. If you miss this entry, there's a secondary entry, and some people will do add-ons and things of that nature, especially in this case. If I draw this line in here, you'll see a reject off of support, left side support right here, broke through this double top, came down, held it as support. What was resistance now becomes support. And if you want to add on, you can add on. So, and again, if anybody has any questions, please don't hesitate to ask them. Let me just take a quick break here and look at some of the questions. I can see if I can answer them. Al T, is there a new indicator zip file we need to install? Absolutely not. The level 3 zip is the latest zip file. The turn and flip trades are what we use for any type of bar that has a wick. So outside of the bricked Renko, which would be stop and go and touch and go, we provide for that also. We provide two sets of criteria for turn and flip. And again, that'll be any type of time frame that has wicks, whether it's tick, range, volume, minute, daily, whatever. These type of setups work the best. You do need to make adjustments, not in the timing or anything like that, but for the chop zone, if you want to use it, like I said, generally on daily charts, it's best just to keep this away and look at structure and things of that nature. But if you take a look at some of these signals when they fire, the ones with the arrows have the deepest pullback, therefore the lowest amount of risk. And you can see the amount of, this is 250 ticks here. You get short here. This is 350 ticks there. We're going to miss these shorts because we have a trailing concept. We're trailing stop dots. So until we get this cyan bar color, which is a price cycle buy, we're not going to be taking any more shorts unless you want to do an add-on if you feel it's a clear reject of support or resistance. In this case, we get short, take our partials, get flat. Trade comes in here, get long, take our 2-to-1 risk, nice trade. This particular case, get out of break even. Next trade here, we look at this and say, okay, I want to take this trade. Very low risk. You can just hold your risk below this intraday bar if you choose. You don't need to hold it all the way down here. Never quite makes it to a double top, so we never really get to target unless your risk is very small. So at this point in time, you can go to break even or just hold your small risk here. No trade setups here. Then you get a nice signal in here. These arrows are really what we like. And again, you can see it goes up here, trails out to here, and currently this is where the market's trading at right now. It's actually, the momentum's in buy, so we're not going to be taking a short. We're looking for what we call confirmed trades. We can set the arrows to fire when this price cycle, in this case, goes into this value zone, comes down, and is against momentum. We can set it so that it'll fire a yellow type of arrow, letting you know that it's against what we call a confirmed trade. So right now I only show the confirmed trades. And I'll go back here in the euro and can see a whole bunch of trades, long, short, over longer time frames, way back. A lot of nice winners, a few losers. So the percentage is pretty high, and that's I think this goes all the way back to it's 1,000 days, whatever that equals, 3 years or something. But here's that similar to the squeeze indicator. It's similar. There's some, a lot of custom programming done in here. It's a hybrid indicator, but the way it looks, it does look like a squeeze indicator. It is a price momentum indicator that has acceleration and some other factors built in to it. It is very unique, in its own right. Like I said, on a nice, you'll see this run here. You don't see a lot of divergence coming down. So people that want to get in, this does give you permission to get in here. So, and then again, once we do that, we get trailed out. When divergence does occur, like it does here with this and this, maybe a strong signal to exit. So instead of trying to trail out, in this case would give you back all your money, you get in here and you see this divergence start to form. You get a up bar close. You say, you know what, I have a lot of profit in here. In this case, it would be 23 even to you're like 150 pips at the close of this bar. You got out at your 2-to-1. You say, you know what? I'm not going to give that up. I went out, and I'll just wait for the next trade. So there's a lot of different ways to manage. We don't talk much about this in the trade room, but you're going to see more on the member site about swing trading, different type of currency pairs and things like that. So I just don't want to focus on the euro. Let me bring in a couple other things in here. Here's a real nice one of recent is the Japanese yen. So you can see all the short signals here. Back in October of last year or whatever, got a nice short trade. Nice target trailing out. We got stopped out here somewhere. You can forget all this. We broke divergence through here, and then bang, we got another signal. Plays around for a little while, and then off she goes. And the trailer on this is just huge. And then you can see back in time, to the upside, to the downside. You want to stay away from markets that do a lot of this. When this starts happening, I like to walk away. When you get these big spike bars, especially in Forex, this is showing some intervention and things of that nature. The yen's, we had a lot of this going back a year ago or so. Seemed to have stabilized, so now we have some directional trends and movement. So you can get an idea what's going on there with that. That would be the yen. Let me just bring in another market as an example. I'll bring in the Australian dollar. Okay, and this is an example here. Again, you can see a lot of the buy signals fired here. You have a small loser here, maybe a small loser here, but then a nice run up here, for a winner there, whether you choose to trail out. This guy right here showed us some divergence, so may have been a good place to exit up here. Nice entry back in here. A nice entry, maybe to an area you want to manage money to break even, not quite at a double top. Quite high, the euro, this is at 154. So, going long up here is hard, but you got some money in it, and, once it gets up here and doesn't want to break through, we go down. Then we get signals to the, to the sell side, all of which reach their 2-to-1 target easily and trailing out. Currently, right now at the moment in time, this is where we're at. You can see here. So that's an example of, the Aussie dollar. Here's an example of the British pound. Again, nice swings up, down, things of that nature. Get a little chop through here. Would like to try to stay away from this. When I see this coming up ahead of time, I'm not real interested in trading anything until things smooth out. So that's the British pound there. And then we go into the, here's an example. Here's a Canadian dollar. Okay, nice swings, back and forth. Again, once we get into a lot of these wicks, tails and things of that nature, kind of time to stay out of that market. But there's one thing nice about Forex swing trading is a lot of markets to trade, so you can look at a various group of different markets and setups. And I think here's another one. This is a Swiss franc, and you can see some of these real long wicks and things of that nature. Not real interested in trading. This is one market at this point in time right now that I would just kind of stay out of. After you see something like that in one day, that's a lot of things going on there, especially when you don't see it in other markets. So also, let me just bring back in this Euro chart. I don't have any ETFs or stocks up with the feed I'm currently connected to, but this is a great way of trading ETFs. Let's just say this was an ETF chart or a stock chart of some symbol. Again, we're looking for the nice movement, not a lot of the wicks and tails. They make good ETFs and stocks to trade. And for those of you that like options, when you get one of these signals, you buy a call, near the money or out of the money. And, as you would manage the trade with the underlying, meaning the symbol that, the option's on, it's very easy to gain some leverage outside of the futures market, outside of the Forex market, in trading stocks and ETFs and things of that nature, in retirement accounts, IRAs, if they let you do it. I happen to have an IRA that from an old job that I had that I do a lot of options trading with, very simple trades like this, no complicated strategies or anything. It tells me to get long. I don't want to buy 1,000 shares of Apple, which I couldn't afford, but and to trade that, or 3,000 shares, but I can buy 3 options, and manage them accordingly. Huge reward potential utilizing that. So kind of with the same signals, you pretty much put up any chart, everything will self-adjust, so that you get this look pretty much on everything that you put up on a chart. There are some exceptions if it's not a liquid market, and if it has a wide bid-ask spread and things of that nature, I'd really stay away from that. We do like Renko bars, and like in the room for intraday trading, the wicked Renko. Let me bring a chart of the euro in. This is an example of the signals on the euro. This was actually a trade. It was called out today. These are multiple days highs here, so kind of a bounce off of that. Didn't really give us our 2-to-1 risk to reward, but it did give us enough to go to say, it did give us here 8 ticks, but it was enough to get a reversal Renko bar and to go out at break even. Okay, and unfortunately nothing's set up at the moment, but in the past, you can see some of these green circles here. These are nice winners on this time frame. And again, these are the fully leveraged 12.50 a tick euro futures market here. And again, you see the support and resistance areas come into play, as well as lines that get drawn in during the day for trading, intraday support and resistance. So then again, you get these yellow signals, which is signaling, which shows signals inside of what we call chop. Not the best place to trade. We really want it to come out, especially when you have support and resistance in here. Double top, reject, back with the swing, get in. Nice profit in here. Multi-lot traders get out a couple of contracts with 16 ticks of profit in it, and then just trail out, right up here, so you still have some profit in your trailer. That being, an example of the euro. You can pull up any of these other currencies. This is 4-wick Renko. It's a rather large time frame for the euro. A lot of people like to pull up the 3. People will pull up range bars, things of the sort. But in the trade room, we can only do so much. So the trade room really does do a lot of talking, market commentary about, divergence, reverse divergence, what's coming up. We try to answer as many questions that we possibly can. So if there's anything that anybody wants to see, I am hooked up to a broker feed, a futures feed. I trade Zenfire in the room and use CQG as a backup. My wife actually trades with CQG as a feed and an execution platform. To me, they're 6 in one, half a dozen in the other, at least from what I can tell. They both are very fast, very accurate, and very reliable. They seem to stay up, and you don't get those connection loss that you used to get a lot. At least not of late. It's really been pretty good. So if there's anything anybody wants to see, markets or things of that sort, please let me know. Oh yeah, I do want to show you something here, just give you an idea. Let me go back here, the power of trailing. This was that crude oil trade that happened on the 6th. It was just a little while ago. Got in the room a little bit, late. This big run down in crude oil was all kind of early. Tried to, really not a lot down here, but you can see the divergence coming in. We get a nice transition from sell to buy, outside what we call the chop zone, pullback, in here long. You get in, risk, reward, 2-to-1, and trail. You got in here about 95.45, and look at this. Right out up here. So, 96.75. 130 tick trailer. It's $1,300 on a single contract. Had a nice add here. Notice multiple days lows. Bounce off of that. Good place to add. Get another nice add here, if you want to keep going. But, notice no divergence here. Now we get up here and you start to see divergence forming. So I don't know if I want to be adding anymore or trying to get long up here. Okay? And it was nice about this, too. It came down. Nice transition from buy to sell. Outside the chop zone, pullback. Nice flip trade short signal. Bang, 2-to-1. Trail out. If you use these actual trailer out here, about ticks in your trailer. But still a nice, beautiful overall day in trading. And these days happen quite frequently in markets like gold and oil. We do like to trade markets that move. Again, here's an example of a trade. We call it railroad tracking into the chop zone, double top reject. Short, hits your 2 to 1. After this, we are now in a state of reverse divergence. Pull back here, I'd be out of here. We're not taking the short, so we filter out this signal here. It doesn't recognize the state of reverse divergence, so this is something that we look at and say, nope, we're not going to add or do anything like that. We trail out to up here. Same thing here, another nice trade here. This is what we call a type 2 trade, where it transitions from buy and it doesn't quite cleanly go through to sell. However, on a smaller time frame chart, it was in sell and out of the chop zone. Gives us a nice, what I call reversal trade. Comes down, 2 to 1, nice trail out. Again here, this is another nice setup we talk about in the trade room a lot. We call it a triple break. It's where you have in a double bottom. And again, in all these markets, a double bottom to the tick, especially in markets like oil and gold, you don't find it that often. But you come in here, you see this double bottom, you see lower highs, and you see this flat bottom triangle or wedge forming with momentum to the downside. At this point in time, we don't care about divergence anymore. Nice trade to enter. Pulls back for 5 ticks of in-trade risk, goes for a 20-tick target. So that's actually 4 to 1 in-trade risk to reward. So, and then once in a while, you'll get this here. You see it was a trade taken out of the chop zone. I'm sorry, inside the chop zone. So, this is actually a trade that was called and posted. And I do want to show you this real quick. I'm going to pull up our website again. This is for everybody to see. You can't get in the members page unless you're a member, but if you go into the trade room, this is the area that I do a lot of adding to, and the very first sentence is it tells you when the invites went out for the trade room for the next week. So if you come in here, it's Sunday night or Monday morning, whatever, and you don't have your invite on your email, then just go to this page here and you'll see that they were sent out. Shoot us an email here, and we'll make sure you get it again. And then announcements of different things that have been going on, as well as talking about a little bit about myself and what I'm planning to do. And then we're actually posting system trades with filters, ones that I call out, and these are only during room hours. So I'm not doing this hindsight. I'm not doing it, well, some of it's after the fact because it's not markets that I'm looking at, but I am following a very strict rule set that is posted to members in the members website area. And then I've started including little short snippet videos, anywhere from 4 to 6 minutes, that go over these trades and talk about, trading in a divergence and the reverse divergence, and, that missed this day completely, so I don't even post anything because I don't want to go back and people are saying, well, you didn't trade that day. But if you look at some of these results, you'll see, some pretty nice performance results here. If you could catch all these trades, but, apparently, I don't, and you see losers in here, of course, too, but people will, traders with the capability and without distractions are able to trade multiple markets. We mix it up generally, covering the YM, the Russell, crude oil, the Euro, and the ES. And here, this actually was a tough day. I believe it was yesterday. And then later on this afternoon, you'll have today's stuff posted up. Today was a nice small winning day. And again, yesterday, tough day, but still not nothing major, loss-wise or target-wise. And I do make comments here. Move to break even, went 75% of my target, and then break even, things like that. Question comes up. Jerry, is there a free trial on the room? We've decided that, what we're offering now, if you join, you're going to get a free month of the room. So, essentially once you join after the first month, it's $99 a month, to have all the tools, access to the website, the members area, which, is, if you go into it, is protected. So only members can get in it. But when it comes to trials, we did a lot of trials were done before me and things of that nature, and it does take up an incredible amount of resources. And what we found out is that a lot of tire kickers come in, traders, just want to see what things look like, and really, the commitment to learn a method, learn a system, and to try to trade it, first in sim and then with real money, unless you're a very profitable trader and can pick all this up really fast and understand everything, is the way to go. A lot of trial traders, they just come in and, they don't go through the training, and, they really, it takes up a lot of resources. And in order to try to keep, the cost of everything down, we're trying to limit a lot of that, a lot of those resources, so we don't have to get extra people on board and things of that nature. So, we got a little incentive going here for coming into this webinar. Those that attended here, like I said, if you subscribe, all you got to do is go to the purchase page here and scroll down a little bit, and you'll see Ninja Trade or TradeStation. But we really like to promote Ninja. All you have to do is subscribe with no trade room. Okay, that'd be the top one on here. And then, you get a month for free, and then what we'll do is after the month's up, we'll send you a link if you want to continue to subscribe to the trade, and we'll be separate from the TFT site. It'll be a separate link that's at $70 a month. You can, continue on with the trade room, put on hold anytime you want. So that's just something to keep in mind. You go to the purchase page down here, click this add to cart without the trade room, no TFT trade room, and you get a month's free. And then you want to continue on with the trade room, then we'll send you a separate link for $70 a month to continue with that. You cannot use the trade room without being a subscriber of tools. We are not set up to be a signal service. That's not what we're doing. We're following all these disclaimers here, from the futures. We live in a highly litigious world, and we will make it very clear that we are educating. We're trying to educate traders while trading ourselves, and I think we have a real nice, simplistic, visually simplistic, conceptually simplistic, a high risk to reward, not a lot of trade volume, meaning trade frequency. You can look at different markets if you want to sit there and click and trade all day long, but we like to go for high probability trades with high probability 2-to-1 reward to risk exits. So, that kind of addresses the trial, things like that. We are serious traders in the trade room, so I really try to answer the questions of the traders that are, subscribers and, are trading real money, as to get their questions answered. New traders that come in, I do spend time with them. I make sure that they have gone through the training. We send out a little questionnaire just to find out your level of experience, whether you're profitable or not, whether you're trading real money or sim, things of that nature, so I can better address traders in the trade room. And that's kind of how that works. Like I said, you go back to this trade room tab. This is all open to the public. Anybody can see this, and eventually what will happen, these will turn into graphs, excuse me, bar graphs, once too much gets added up here, so you can kind of see an equity curve.